Good afternoon, everybody, and welcome to the next installment in the Admiral Markets Trading Spotlight webinar series. And today we're going to be talking about intermediate and advanced scalping strategies. My name's Paul Wallace. I'm your guide here for today. We appreciate you joining us for our session today, whether you're joining us live stream or whether you're watching this on demand on one of the Admiral Markets social media platforms on YouTube and Facebook and Traders Yard. You're very welcome to join us. We enjoy the interaction. If you're liking the session, please give us a hit a like on YouTube, or alternatively, if you've got questions or thoughts, please put them into the chat box. We'd be delighted to hear them. And if you've got any ideas or thoughts for future sessions, we'll be very delighted to hear them as well. So, we appreciate that, here at Admiral Markets, we appreciate that we're going through rather strange times. Okay, we're here during lockdown, but that doesn't mean that we can't still keep learning and engaging with markets and furthering our knowledge and our understanding of what's going on in markets. We here at Admiral Markets, we hope you're all at home. Hope you're all safe. You can tell how long we've been in lockdown by the length of my beard, but we all hope you're safe. You're with us. We really appreciate you joining us, and let's have a talk about what we've got going on to today's session. So what am I going to talk about? Well, we'll talk a quick recap on scalping markets with Admiral Markets MT4. The Trading Spotlight webinar series is a fantastic, absolute fantastic sort of archive of webinars covering a whole wide range of topics that are useful for you in your trading journey. And we've done a couple of videos on various aspects of intraday trading and scalping markets. So, by all means, please go back and check those. You'll find them in the archive. We really are trying to help you as much as we possibly can in your own trading journey. But we'll talk a little bit, quick recap of it. We'll talk about what does a trader need to be aware of when scalping markets, and we'll talk about what are some advanced ways to scalp markets when you're a private trader working from home or from your location. And I'll just share with you a couple of simple scalping tactics that we can look at on popular markets. So stay with us till the very end, because we'll switch across to the MT4 Admiral Markets platform, where we'll be able to take a little look at markets, because they've been rather interesting, and we'll look at them through the prism of how we would particularly scalp those markets. As always, we want to give you the most value in these sessions. So, we've got a great number of people here joining us. So, if you've got any experience of scalping markets, it'd be great if you just ping that in the chat box, whether, what you have scalped, how you found that experience, what you learned from it, okay, what you think you need to learn. The more feedback we get from yourself, the more we're able to actually help you, the more actually we're able to sort of fine tune our webinars to sort of give you the most support and value that you possibly can from joining us. So, as always, as I said, my name's Paul Wallace. Okay, primarily I'm a swing trader, but I will do sort of intraday and scalping on a mean reversion basis for my intraday engagement with markets. Admiral Markets are a global brokerage there, as you can see, offer a wide range of financial instruments to trade. They're licensed and regulated across a broad range of regulatory environments, providing competitive spreads on the most popular trading instruments, and also through being able to trade through both MT4 and MT5. If you've got any questions, then please, by all means, just get in touch with your account representative, and they'll be very happy to guide you. So let's talk about advanced scalping strategy. So as I said, ladies and gentlemen, if you've got thoughts or ideas, or you've got experiences, please put them in there. It'd be good to know how many of the people here joining us today have actually sort of engaged with scalping of markets. I'd be interested to see whether you're completely new to it, or whether it's something that is part of your sort of trading armory, so to speak. But regardless of that, scalping is deemed to be a very popular way to engage with markets. Okay, but pretty much like all other aspects of trading, it's important to be prepared for what awaits. Things happen fast when you're scalping, so you need to know how to handle yourself. And in this session, we'll discuss some concepts regarding scalping and provide you with 2 exciting scalping tactics. As I said, scalping appeals to people because it's believed that they can actually sort of, things can move very fast, which means that, the sort of the feedback loop that you get as a trader is almost is very fast, and a view that might lead you to a faster progress in your own particular trading. But as I've said there, it's important for you to be prepared. Okay, things do happen very, very fast, and if you're not really au fait with your platform, or if you're not au fait with your risk management, or if you don't really know your own particular style of trading, then it can be a bit of a trap. And what we're hoping to do today is to just maybe take a little bit of that a little bit of the sort of kind of grayness, the opaqueness that sometimes people look at when they go scalping, and sort of just give you a couple of ideas of what you could look at to sort of try and help you in your own experience. So just looking at some fascinating feedback there on the webinar chat, and that's great. We love it. It's great. Hello, Pedro. You're very welcome joining us. Bartholomew, I hope I pronounced that correct. Please accept my apologies. But Bartholomew said, I tried to scalp with 3 moving average indicators, but didn't work as well as I'd like. I was using the 5, 18, and 13 EMAs. Interesting. We'll come back to that a little bit. Anthony said, I've tried, but it happens fast, and we really need to recognize things without thinking. And you're absolutely right there, Anthony. Thanks for that. It's as I said, things happen fast, so it needs to be very simple in the way that you look at the market and in what you're actually looking to achieve, because things can be gone in a blink of an eye. And if you're not ready and prepared, well then you just find yourself chasing your tail. Robert says, I use the 5-minute and 1-minute charts and have targets of 3 pips, and it works well at times. And that really is scalping there, Robert, looking for 3 pips at a go and such. So it's that's great. Really appreciate the interaction, the feedback. It's fantastic. We really helps me be able to sort of talk at the right level for the people who are joining us today, so that you hopefully can all have something that you can take away. I'm a great believer that in all of this trading spotlight webinar series, if you're watching them all, even if there's just one thing you can take from every webinar that you could just add and use in your own sort of building your own trading business, well then your progress over the last year will have been absolutely fantastic. Okay, and it's important that you sometimes new traders, they get a little overwhelmed. There's so much information, so much available out there, so much help and support. Sometimes it's easy to get a little overwhelmed. But just talk about, even if there's just one thing you take from every one of the Trading Spotlight webinar series that you build into your own trading plan that helps you just progress and just move forwards, inch by inch, then you're making great progress as a trader. Lauren too. Lauren, once again, I hope I pronounced that right. I appreciate we have a very broad global audience here from all around the world. So if I don't pronounce your name wrong, please accept that the fault is mine, no one else's. I apologize. But Lauren too said he uses the MACD and the RSI on the 1 hour chart. Okay, so well, if you're trying to scalp on the 1 hour chart, that'll be interesting to see how you do that. But here we are today to talk about different ways. And what we can see even from that, and from what I'll share with you, is that there are many ways to skin a cat, and trading is very much the same like that. Okay, it's not a case of there is only one way to trade a market, to scalp a market. It's about finding a way that works with your personality, that you can resonate with you, and you can actually sort of find and identify and work with on a session by session and trade by trade basis. That's excellent. Thank you for that. Thanks for that feedback and interaction. We really do appreciate it. It's really great to be able to work like that and understand where people are coming from. So, we thought we'd talk about, what are the pros and the cons of scalping? Okay, it's trading markets. All right, there is no perfection. Okay, there's no perfection. There is no sort of magic space to be in, that where invariably everything is easy in trading and nothing is ever a challenge. Okay, it's trading, right? There's a challenge to it, and there are pros and cons to every element of however you choose to engage with markets. And what we're talking about here is a few, what are the pros for scalping? Well, for the most part, I would caveat, but for the most part, scalping lends itself to most markets. Okay, so that doesn't mean you have to be a specific instrument specialist, like only trading oil or only trading euro dollar, etc. It's, you'll find there are most ways to be able to scalp most of the popular markets. Now, admittedly, what you're probably going to find is that you'll probably find yourself focusing on one or two of the specific instruments that particularly suit you or work best for you. But as a general rule, they can actually lend itself to most markets. You can scalp at any time, okay, within reason, which makes it feasible for part-time traders. So we appreciate that, a lot of the people who join us on these sessions, they're not full-time traders, they are part-time traders. They are trading, around other commitments. It might be a family, might be a day job, might be a night job, there's other commitments and responsibilities, and we understand that. And so in some ways, scalping actually is feasible, okay, because you can do it at certain times based upon the particular instruments and the particular time zones that you find yourself in. And then also, your time exposure is limited, all right? You're not in the market for long, which, when we're enjoying turbulent times, shall we say, in the markets, well, then actually that is quite useful, because it's, your exposure is very limited, and it helps you manage your risk exposure. You're not looking to hold the position in the market for days, weeks, months, okay, which is can be sometimes fraught when market's a little bit turbulent. Your time exposure is limited. You're in and you're out, okay, and that helps manage your risk exposure. But as I said, that it's, there's no perfection. There's always pros and cons to every style of trading. And some of the sort of challenges people have with scalping is that, firstly, it is a style suited to more experienced traders. And why is that? Well, we just saw a few of the comments there from the people joining us about their own experiences, that things happen fast, okay? And as it says, the second market can turn against you. It can be very quick, okay? So things can happen fast. And if you don't know what you're doing, or if you're a little bit inexperienced, or you don't particularly understand the market that well, well, then things happen very quick and they can go against you very, very fast indeed, okay? What it means is that you need to know what you're doing, and as it says there, you need to be very disciplined in your execution. This comes down to being disciplined in your execution. And it becomes easy to be disciplined in your execution if you have like a simple idea that you're trying to follow. I sometimes see traders, work with traders all over the world, and they might have what might appear a great plan, a great trade plan, okay, to scalp market, but actually, it breaks down when they try and employ it in a market, because things are happening too fast and their trade plan is too complex, okay, it's too what's the word here, too complicated, okay, it's too intricate, okay, it's too intricate, it's not required, okay, it just needs to be a simple plan that you can execute flawlessly. Trade after trade after trade. That is key, ladies and gentlemen. That really comes down. And also, you can only do it for a short time, 1 to 2 hour max. Okay, so in the way that it is very good that that we can basically you can trade it sort of at any time. The truth of the matter is also is that you can really only do it for like a couple of hours max. Right? People sometimes think they can sit there all day scalping markets from 6 in the morning till 10 o'clock at night, and I can assure you, you can do it. But your performance will degrade rapidly, okay? Human beings, rule of thumb, we kind of tend to work well for about 45-minute bursts, all right? Some of us can do a bit longer, some of us a little shorter, but as a rule of thumb, you can work around about 45-minute burst, okay? So, realistically, you're doing like a 1 to 2 hours, okay, of really quite focused, quite intense work, because even if you don't take a trade, because it hasn't hit your trade plan, you're still there, you're still engaged, still intense, you're still watching, things are happening fast, you need to be on the top of your game, okay? So you can only do it for a couple of hours max. Don't be thinking it's something that you could do 10 hours a day during lockdown. That I assure you, your performance will degrade as the day goes on, because it is actually quite draining there. Bartholomew says, how can we measure our experience? What kind of experience is necessary for scalping? That's a good point. That's a fair point, Bartholomew. Firstly, I'd say that one of the elements is to prove that you are able to follow a simple mechanical plan. Okay, so you need to be able to show somewhere between 20 to 50 trades that you can follow a simple mechanical plan, and it's not about the outcome of the trades. Okay, it's the showing that for 20 to 50 trades you can actually follow that trade plan. Trade after trade after trade after trade, regardless of what the outcome of those trades are, because what it is that it's building up a level of self-trust, all right, self-belief, self-confidence, that you know what to do in the market, regardless of what else is happening on, that you can actually follow a very simple mechanical plan. So if you're new to trading and you're just trying to trade everything, and you're just very discretionary just in the way that you engage with markets, trying to scalp 1 minute, it would be challenging. Okay, you need to have a little bit of a mechanical base. Okay, just prove to yourself that you can build the self-trust necessary to be relied upon to do what needs to do when the market moves against you very fast. But that's a great question, Bartholomew. Thank you very much for that. So it's less about experience, but more about long-term results and discipline. It's a kind of like it's a nice Venn diagram there, okay, where experience, okay, results and discipline come together. But to begin with, discipline is an element of being experienced. Okay, it's consistency and discipline. It's very difficult to be one without the other. You can't be a disciplined trader without being consistent. It's hard to be a consistent trader without being disciplined. And as you do that and show that, well, then you build up your experience. And as you build that experience, then you start to build your self-belief, your self-trust, the self-confidence in yourself to be able to guarantee that you know what to do on that trade. Okay, super. Thanks for that, Bartolome. Great questions there. So, when it comes to thinking about strategies for, advanced scalping, what are the kind of factors that sort of affect scalping? What are the factors that kind of, be of interest to or relevant to us? Well, one of them is liquidity. Okay, your ability to get on your position easily. Okay, without too much movement. Generally, as a general rule, for new private traders, that's not as big an issue as people would think. But if you're trading large size, if you're trading at an institution, etc., scalping becomes more of a challenge because of liquidity issues. You also need an element of volatility, and it's kind of like how can I describe it? You're kind of walking a fine line here, right? You hear lots of traders talk about, they love volatile markets. Well, we've got volatile markets at the moment. Okay, when we talk about this in April 2020, and have done for the last 2 months or so. Volatility is, when it's the wind in your sails behind you in your trade, fantastic. When it's the headwind, it's a bit more challenging. But what we are looking at is volatility, as in you need to look at an instrument that does have some movement during the day. Okay, an instrument that only moves a couple of ticks every day is not necessarily ideal for scalping. We need something that has some good movement, some good ranges. Okay, that allow us the opportunity to get in and take our little trades. It's also the time frame, okay, and the time frame in terms of, as we've said, the kind of the window within which you can trade, but also the time frames, okay, that you look to execute on. So we normally be looking at like kind of 1 minute, 5 minute charts for scalping. Some have on other platforms, they have other time frames, but of course it's that shortest time frame available. And finally, also it's risk management. Okay, risk management is enormously key. Okay, risk management is key in that understanding, how much you are risking, but also your trade management, as we've just talked about there, okay, before, in terms of your execution and your discipline in managing your trade becomes unbelievably crucial, okay, in this. And so, we'll talk about that as a few more slides down, as we talk about one or two opportunities that you can particularly look at. So, what kind of instruments are we looking for, okay, in terms of looking for a scalper? Well, you might hear some people maybe define them as cheap instruments, okay, but what they're meaning is that they're tight spreads. Okay, if you're trying to scalp something that has a 20 pip spread, okay, it's going to be tough. All right, that's going to be tough. So we're looking for instruments that have particularly tight spreads. So yes, spreads have eased a little bit, okay, during this particular volatile time, but we will return to normal times, okay, at some point in the future. But what we look at, if you look at things that have relatively tight spreads, okay, so you're looking at things like the major indices, okay, the Dow, the DAX, FTSE, etc. They all have tight spreads. You look at FX markets, okay, you're looking at particular elements like some of all of the major kind of dollar pairs. All right, all the major dollar pairs, they have very tight spreads. Oil has particularly, WTI has had the tight spread of between about 2 to 4 pips, okay, which is tight enough, okay. And you'll have a look at as we show through just a few of the instruments that show that where you've got tight spreads, that allows you, okay, because you've got to remember your spreads, it's a cost of business, all right, it's a cost of doing business, and so you need to be aware of that as a way and means in that you engage and operate in markets. Yeah, you're looking for ones that have good daily ranges, as we said there. You need an element of instruments that actually do have some good movement in, so that you can basically you can just fish those ranges for a few cheeky pips here and there, and actually has a support technical analysis or price action at lower time frames. All right, which is what we're going to be looking at a little bit in a few slides time. And you want to be aware of things like major support and resistance, right? Which certainly in all of my webinars I've done here for Admirals, regardless of whether you're trading 1 minute charts or 1 hour charts or 1 day charts, you need to be aware of those kind of major support resistance levels. Okay, it is key. You don't want to be buying into resistance or selling into support on a level, even if you're scalping, because you're just making things harder for yourself than they need to be. We've talked about PDL, previous days lows and highs. Okay, they become very key. All right, they become interesting spots that we can look around, and also BRN, big round numbers. Okay, you'll see them. They have a psychological impact on markets, and when you're looking at it at the short time frames, which we're about to talk about, you'll start to see how markets react there, and start to recognize whether that provides an opportunity for you in your own trading. So we're going to talk a little bit about here called, this is a starting point for you. If you've never scalped before, this is something that you can take away and start with and have a look at. And it might be a little bit aggressive for you, but it's a way and means to just have a look at how markets react at those kind of lower levels. The BLT trade, the big level trade, it's a simple scalping strategy that many hedge funds and market makers use every day. And it's combining event-driven and relative value styles in the way it operates. So what's our setup? Point one, okay? Look for a market trending towards a key psychological level. So we talked about those big round numbers. So I'm going to show you examples from in the last week, okay, on elements like the dollar index, okay, the dollar index where there's a big round number there at 100, and price was reacting to it. And we'll show you other areas, other instruments where you can see that. Because you see, what happens is the dealers, the hedge funds, they know that there are orders there, and that there is also a higher probability of reaction at those big psychological levels. And therefore, it's an opportunity for you to trade a bit like a hedge fund, a bit like a scalper, and scalp away, okay, for a few pips in the few points in that market. So here's an example. This is silver, okay? This is silver, and this is actually, it's on the 30-minute chart around, when it was trading around the $15 level, okay? Big round number, psychological level, but hopefully you can see that, every time it got up there, okay, it got knocked back, okay? There was a reaction, okay? It got faded from that level until finally it broke through it, okay, and carried on in its upwards trajectory. But, just starting to look at how those markets react around those key big round psychological numbers, that is what provides us opportunities to scalp. When we go down to the sort of 5-minute chart and you break down into that area, well, then actually what you can see is that there's actually quite a few, let's use the old drawing tool here, okay, is that, what you can start to see is that, there were actually quite a few reactions there, okay? You can see there's quite a few reactions there, how price came up and hit it and bounced away, okay? Came up to the level and faded away before it finally broke through and carried on in its uptrend there, okay? So just, as I said, sometimes, as an exercise, go away, just take a look at a couple of charts where you've noticed that it's been around a particular level, and if you start to zoom down into the 5-minute, 1 minute, you start to get an idea of seeing how that market reacts at those big levels. That's what this is all about. So, if you wish to be to sort of set trade orders at this, well, you can set your orders, okay? So, you just sell or buy one element at the figure. So, if we're coming up from below, you're going to be looking to fade it and sell. If price is coming down to that big level, you'll be looking to be buying as part of the fade. What you can do then is, if you wish to sort of be aggressive, okay, then you can actually sell a second element at 5 pips beyond the figure, and the sort of the third element at 10 pips over the figure. And then all stops will be set for 20 pips or 20 points, okay, over the particular figure, past the figure, with a profit target for 2/3 of your position at 5 pips below the level, okay. So this goes, normally all against, kind of how, I would operate in terms of my reward to risk. I'm always looking to sort of risk a little to make a larger reward, but scalping, okay, scalping is quite different. It needs to almost like a different mindset. It's one of the reasons we were talking earlier about how you need to basically, be very understand, have a simple plan, and be able to execute it very, very quickly and clearly, because that becomes key for us. So, you know, you can see here that actually whenever price did that, okay, on this goal, whenever it came up, okay, it dropped its 5 points, okay, dropped its 5 points considerably, consistently, okay, before it actually sort of blew through there, okay, you know, and that's what it is. You know, we're looking to take, you know, 5 points, okay, as a general rule from this, okay, that's what we're looking to, that's what you're looking to achieve, okay, that's the sort of that's the game. You know, we're not in here to try and we're not in here to try and, you know, hit a home run with our trade. We're not here to sort of land a knockout punch. This is just literally just jabbing away, okay, just taking a few points here and there based upon what the market is offering us. So the keys to this trade, okay, the additional rules are you need to be prepared ahead of time and stay vigilant, which should be relatively easy, because if you're doing your analysis before the session, you should be able to identify in your particular chosen instruments which are the big round numbers. You might have seen them there, you might just be able to see them on a chart where prices happens. What you find is, you know, these kind of big round key psychological levels, it's almost like they become a magnet, okay, because, you know, there's lots of orders sat around there. There might be stop losses, okay, there might be entry orders, okay, there might be profit targets. There's lots of orders sat around those big round numbers, so that it becomes like a magnet. It kind of draws price action towards it. If the trade does not work out immediately for a maximum of 15 minutes, then call the trade. Okay, this is a scalp, all right? We're not looking to sort of just try and, you know, pick some fantastic trade that's going to run forever and ever. It's a scalp. So if it's not worked out within 15 minutes, call your trade. Okay, this is the execution part. You know, this is the discipline where it's put down about the execution of the plan. Although the moves are similar around most key numbers, this trade works best when, you know, you've had at the end of a sort of an overbought, oversold intraday trending move, or it's coupled with, you know, very strong psychological numbers. And advanced traders may look at previous days' highs and lows on big news days as well. That's a little, that's a kind of like a little research hint for you that you might want to take away and have a look at yourselves in your own particular trading style. And remember, you know, when you're trading the BLT trade, you're not trying to predict the future. You're just trying to ride the kind of the higher frequency, the kind of hedge funds, the market makers' coattails. Okay, you're not looking to be a, you know, a rock star trade. Okay, you're in it for a quick few pips, a scalp. And here's a very key rule: is that you've no more than 2 attempts in any one day. Okay, that's it. No more than 2 attempts in any one day on that particular level. Because as you saw in that silver trade, once, you know, very often, you know, it'll work until price actually continues. It's, you know, it's soaked up the orders that are there, and it'll move on. So no more than 2 attempts in any one day on a particular level. Okay, that's what helps you do there. Okay, so Anthony says it's a bit like GBP USD cable at 125, although it seems to have gone through instead of bouncing. Well, you know, what you'll find is if you go past Anthony, you'll see that, you know, there will have been times it will have bounced off, but then also it's just, you know, it will get to a point where it'll flow through. And one of the challenges we have at the moment is that, you know, because of the market volatility, is that moves are sometimes driven more by, let's say, by sentiment, okay, because a piece of news comes out or everybody's a bit skittish in the particular markets. So, you know, as we said, you know, this was an opportunity on silver where price just kept coming up and faded away. Okay, you're fading it away for 5 points. No more than 2 times in a day, because you don't want to get caught when it actually does break through and go through that particular level. And as an example of pound against the Japanese yen there, okay, and actually we can just see 140, okay, it just comes up and hits it twice before it actually, every time it fades away, okay. And so there's opportunity there for you to just pick up your you know, your 5 points there as it trades away. And this is actually from last week. Okay, this is the dollar index. Now I have this on the 15-minute chart just so I could get in all the examples from it. But this was around the big number 100. Okay, on the dollar index, and hopefully you can see every time it comes up, it fades away. Comes up, fades away, comes up, actually fades away a couple of times before actually on the 3rd attempt on that day, it actually breaks through. Okay, so it's very key. All right, you can trade this, but it is important to recognize no more than 2 attempts in one day on that particular level. All right, we're not trying to be heroes. Okay, you're trying to be in, take a few pips and gone. That's it. You're not trying to be a hero, ladies and gentlemen. So that was the BLT trade. And here's another one we'll share with you called the 1 minute scalping strategy. And it's a simple strategy you can use on 1 minute charts, but also 5 minute charts. The key features are that it is a visual tactic. So you actually, you need to be watching the chart for that period of time. It has a manual definition of entry based on a pullback. It's manual execution, and it has manual and system exits depending upon your style. And it is viable, as I say, for all those kind of cheap instruments with small spreads. So things like DAX, Dow, FTSE, Euro, dollar, okay, pound against dollar, Euro, yen, okay, there's a bit of a basket there of instruments that have small spreads. So what we're looking at is just using simple price action here, okay? So you're going to be using fractals, which are on the MetaTrader 4 platform. If you don't know what that is, I'll show you where they are in a moment. We're just going to use 3 EMAs, the 50, the 100, and the 150 exponential moving average, and just a simple 200 period moving average as well. So there's four moving average and fractals, price action, and that's it. So how are we using this? Well, we're using this because the 50 EMA is giving you the sort of short-term trend, the 100 is giving you the medium-term trend, and the 150 and the 200 gives you a little bit of a longer-term trend. Now, it's all relative, okay? So if you're on a 1 minute chart, the 200 period moving average, on the long-term trend of a 1 minute chart, it might only be for an hour or so, but that's actually all we're looking for, okay? Remember, we're only looking to trade for a couple of hours. We're not looking to try and hammer this all day, every day. What we're looking for is, we want price to be above all of those 3 main exponential moving averages, the 50, the 100, and the 150. So they're in alignment, and that's giving us a bullish market, okay? So let's use the drawing tool here. You can see there that, okay, price is trending up, and it's above the 50, the 100, and the 150. Okay, and on the flip side of that, okay, we want price to be in a downtrend and beneath the 50, the 100, and the 150. Okay, that gives us a very quick, clear, and concise indication of whether we're in a trend or not, because we're looking to sort of trade a pullback here, ladies and gentlemen. Okay, so ideally, what we'd like to see is we'd like to see the moving averages, just going up at around about the kind of 45-degree angle. Okay, all right, or that'll be the 135-degree angle if you were looking down there, just a bit quick maths, but ideally anywhere between 30 to 60 degrees, okay, on the angle. Okay, we just want it to be, we don't want to, it's like a Goldilocks zone. Okay, we don't want it to be too steep, okay, because the steeper it is, the faster it'll fall back, but equally we don't want it to be flat, okay, because there's nothing going on there. We want it just to be chugging away quite happily, okay, and a nice trend on its 1 minute chart. Okay, and if you can see that, you can work out higher highs, high lows, and see that those moving averages are in alignment there and prices above it. We're in business. Okay, we're in business. So yeah, and as I said there, if the moving averages are absolutely flat, they're all intertwined like that with price, okay, then just leave it alone. Okay, that's just price is congesting. You'll probably see that over in kind of late, trading in the UK time zone. You'll probably see that late morning into lunchtime. Okay, in the American session, you'll see that kind of later in the day, the kind of around a 5-ish, 6-ish, the American lunchtime-ish zone. Okay, you'll see that there as well. Okay, so it's just a case of when market is like that, just leave it. Okay, don't try and fight it. Don't try and project what you want onto it. Don't try and be as I said, don't try and be a hero. Don't try and be a superstar. We're not trying to be that. We're just trying to trade the easy markets that sort of give us the opportunity. So what we're looking for is, once we've established in this case that it's a bullish market, we're waiting for the next step. What we need to do is we need price to take a breather and to retrace back into the moving averages. Ideally, we like it to test the 50 and the 100 period moving average to confirm that we have a strong trend in place. Okay, that doesn't always happen. If it's a very strong trend, okay, it might actually only just come back beneath the 50 and go because it's in such a strong trend. But ideally, we've found over experiences that we like price to sort of come back and test, trade beneath the 50 and the 100 period, or testing the 100 period moving average as well. That's our ideal setup. We don't always get ideal though, because sometimes a trend is so strong that it is off and it's gone and it's flying. But that's what we're looking for ideally. But the good thing is, it's visual, but you can see that very clearly on your chart when that does happen or when it doesn't happen. Once it's tested the pullback, we're waiting for the trend to re-exert itself. Okay. If it doesn't, well, then there's no trade. Okay, If it does, then we have a simple trigger. So, you know, price has been in its uptrend. It's come back. It's traded beneath the 50. Now it's tested the 100. And we're just looking for a very simple sort of, you know, trigger to get us into that trade. But if price keeps continuing down here, well, then it's not working. Okay, it's not working. The trend is changing, or the trend is taking a deeper pullback. That's not for us at this particular moment. Once price has closed beneath that 50 period moving average, okay, and ideally, as I said, ideally we prefer to see it come down and test 100, but sometimes, you know, in a strong trend, you don't always get that. What you're doing is you're waiting for price to close back above the 50 period moving average. And sometimes that might take one candle, or it might take several. So in this particular case, you know, it had come back and tested the 50, but here it comes back, it closed beneath the 50, and then immediately, okay, on a strong bullish candle, close back up above the 50. At that point, you're entering long at market, okay? You're entering long at market. That's what you're looking to do, okay? So it's, you know, price come back beneath the 50, preferably tested the 100. But once it's come back above the 50, we're long, okay? That's it. We're just, you know, buying the market. And, you know, once we've entered any trade, well, we need to manage that trade, okay? Your stop loss goes beneath the recent low or a recent fractal, which I'll show you in the chart, okay? Or if you're aggressive, okay, in your risk management, beneath the low of the last two candles. And in this particular case, it's the same thing, okay? Beneath the recent low, recent fractal is also beneath the low of the last two candles, okay? So that's what we're looking for. Always, you know, it's important to know where your stop loss is going, especially scalping, because things will be happening very, very swiftly, ladies and gentlemen. And then what are we looking for as you know, for a target? Well, personally for me, what I like to do is, you know, from where my entry is and where my stop loss is, I like to project a 261 Fibonacci extension. Okay, if you're not really too sure about that, well then what you'll see is go and have a look on the webinar archive. You'll find all about using fib extensions in your trading. Or if you want to be aggressive, you can aim for the 423 extension, which is up here. Okay, but personally, I tend to like to get in and out. Okay, I'm not one for sort of trying to hang around. Okay, on a scalp trade. Or, you know, some of you prefer to use a trailing stop, in which case I'd be saying that you trail beneath the low of the last three candles. So every time a candle closes, so when this candle closes here, you're looking back, you know, what is the low of that particular candle, the last three candles, and just trail your stop there until you are taken out, which works really very, very well in a very strongly trending market. If it's not a strongly trending market, you are likely to be sort of tucked out relatively quickly. As I said, there is no perfection at scalping. So yeah, so here's an example of, you know, of that, you know, how you would move your trailing stop if you were just using a 3-bar trailing stop. But as I said there, please note, it's not always possible on 1-minute charts, you know, in terms of being able to set your stop, because, you know, price action might be very, very close to where your stop would be triggered. So you might actually have to manually just be prepared to sort of kill the trade. Okay, so based upon that work. So it's yeah, so using that 3-bar trailing stop, yes, it can help you stay in really good long runs, but equally it can require more more dedication, you know, kind of more interaction as you actually manage that particular trade. And it just comes back to knowing, as I said, you know, having the discipline to know that you can trust yourself to basically, you know, to sort of execute your plan trade after trade after trade after trade, because things will be happening fast, ladies and gentlemen. So, you know, the bearish setup is pretty much in the reverse, okay, in that, here we go, and that, you know, you're looking for the 3 moving averages in alignment, okay, you know, price beneath the 50, you know, the 100 and the 150, and price retraces back into that 50, okay, to 100 area. Ideally, we'd like to see it test the 100, okay, but as I said, we don't always get that. And then here, when price recloses back below the 50, okay, well then we are short at the market. Okay, short of the market, your stop is above, in this case it's above the recent high, okay, and that's then we have the trade on, and then we have our trade management in place in terms of knowing where we're out if we're wrong, and knowing if where we are when we can stick with the particular trade. So as an example here, this is the DAX, okay? So a little bit like the one we looked at, we can see price has been in a downtrend, the 50, the 100, the 150, the 200, okay? Price comes back up, it closes above the 50, okay? ideally we'd like it to go back and test 100, but as I said, when you're getting strong moves, that doesn't always happen. But we can see here, price actually, it closes back beneath the 50, and that's where we enter. Stops very clear above the kind of recent high. Price actually sort of just goes on. Now, if you were using a trailing stop, you'd have probably been stopped out. But actually what you can see is price comes back up above the 50. And then once again, it closes beneath the 50 there, okay, in an engulfing candle, okay, an engulfing candle, key reversal candle there before price moves on. And, you can see that once it has done that, well, then price actually moves pretty fast there, okay, until it actually comes back up. It actually tests the 150 before it basically comes down here. But by here, you can see here in this one, it has closed beneath the 50, okay, but actually, when you look at the distance that it's already moved, it's a little bit sort of far away from the 50 for my personal tolerance, okay. I like to see, pullbacks in there, okay, closes just the other side of the 50, and then that's an opportunity to short up market, to be in to sort of take a few pips on the way down. This is the Aussie against the Japanese yen. Okay, you can see, it's a bullish trend, isn't it? Remember I was saying it's kind of like a Goldilocks, okay? What we want to do is we want to see and experience and enjoy just having that nice sort of kind of suitable trend there that we can actually, that we can work with, okay? It should, I say all the time, good trends should leap off the chart at you. And we can see that here as it does, once price is in there, it comes back, and you can see price comes back, okay, beneath the 50, then it closes back above it, does it here, but actually it will fail, but then it sets up again, does it again, and we can see that does it here, but it fails, but actually it comes back and starts to do it again as it moves its way up, okay. So, this is the thing about scalping, that's only just over like a couple hours period, but there's actually 1, 2, 3, 4, 5, 6, 7, 8, there's 8 trades there, okay, 2 of which fail, 6 of them which work for you, and that's scalping, okay. It's a way of keeping you busy in terms of your particular trade management. And pound against the dollar here, okay, is that it's a case you can see the price has got above the 200, then it's working its way north above the 50, above the 100, above the 150 there, and the 200, and then actually price comes back. We can see it tests the no, it doesn't go through the 50, tests the 100 before coming back, okay, and actually that's our entry here, okay. We're buying at market, stop beneath that recent low, and then our target is up here, okay. So, it's a case of, we just want to see a nice trend. You want to be able to see a nice trend, you want to see it pull it back, you want to see that trend re-exert. If it doesn't, we're not in the trend. If it does, we're long, entering up market, okay, 1 minute chart, we're away. So a few final points, okay. Points for success to help you with this. You've got to cut your losing trades quickly, okay. There's no messing around here, okay. This is the execution in the discipline in your execution, okay. Same with the lack of momentum trades, okay. If the trade is triggered but then actually just goes nowhere, does nothing, well then it's probably better to step out. We're looking for the trend to re-exert itself, for there to be another push. If there isn't, step aside, okay. Don't be surprised if you have a good few scratch trades, okay. This is, as I said, things will move quite quickly. Doesn't matter. Don't be surprised if you have a few scratch trades followed by a string of winners. That can actually happen. And then losing trades can help pinpoint market reversals, okay, which you can use to recover losses. But I'd say that's probably more a point for quite experienced traders who have a better reading and understanding of the market just through purely their experience, okay. But there's a few points for success for you, okay. So in conclusion, ladies and gentlemen, scalping, it's a popular way to engage with market, but it's important to be prepared and to know what you're letting yourself in for. It's important to choose liquid, cheap markets that have got tight spreads, good liquidity and good volatility. Patience and discipline become even more important when scalping. They really do, okay, because things can change very, very quickly. And practice makes perfect. Practice makes perfect. So, there's nothing to say you can't start to trade this on a demo chart. I'm just looking at the timings. And, we'll sort of have a look at kind of live markets for the last moment or two. If you want to learn more, okay, you can join us in the Trading Spotlight community there. My friends Marcus and Jens put up some fantastic stuff on there. Traders Yard group, tradersyard.com/group/312. Don't forget to join us next time. My colleague Marcus will be talking on Wednesday about how to avoid Forex scams, including what are Forex scams, how to spot one, what are the tips to avoid them, and that's on Wednesday at 2 p.m. And you know what we're you know, for all more analysis and education, you can go to the admiralmarkets.com website. There's a fantastic plethora of resources there for you. And if you want to contact us, well, you can do so. Email at hello@admiralmarkets.com. The youtube.com/admiralmarkets has all the trading spotlight webinars, and as this one, if you like it, give us a like. And on facebook.com/admiralmarkets global. I hope you found that useful. I hope you found that interesting. I apologize. We've kind of like run over time a little bit, okay, for us, but there's lots I want to explain. There's some great questions I wanted to help you with, okay. If you have other questions and stuff, you know, please come and join us in the tradersyard.com portal there that we are there. You know, you'll find myself and Marcus and Jens are there throughout the week, okay, and we can we're always happy to sort of have interaction and have a chat and help with you. And as I said, you know, I wish you the best of success in your own trading, and I look forward to speaking to you in at the next Admiral Markets Trading Spotlight webinar session. Thanks very much, traders.